I'm Paul, and I'm the CEO of a company called Just Collecting. Originally, I was a chartered accountant, and then I moved into collectibles, and I've been doing collectibles for 23 years now, so it's been the majority of my career, is this strange world of collectibles, which I find incredibly intellectually stimulating. As a company, what we specialise in particularly is stamps, coins, autographs, historical documents, memorabilia. It's getting huge now, particularly pop memorabilia. And we also do limited edition art. And these are the areas where we have significant internal specialist expertise to provide the service. And our business model is really client relationship management. So we build strong personal relationships with our clients and help them to build a collection. And most of those people that buy for collectible pleasure also see it as a good investment. It's an asset, a store of value that goes up in value over the long term. Now, we have a small number of clients that actually look at it as nothing other than just an investment. And these are generally very, very wealthy people that put a very small percentage of their wealth into collectibles as a diversification into something that's quite a lot of fun and quite enjoyable. But what I'm going to cover today is, well, what is it like as an investment? Is it any good? So the first slide shows some historical proof over the past 20 years. To explain the indices, I'll tell you the caveat is that these indices are they're not by a regulated sort of market or anything, but there is a book out there called Own a Fraction, Earn a Fortune by a partner in Chartwell Capital, and he did a lot of research into historical prices in each asset category, which provide a really good independent assessment of what to expect. And the average is about 10% a year. Over the long term is what to expect. This one up here is autographs, which is the best performer, funnily enough. Now, the main thing to see, a good one that illustrates 2008 is the last time I was standing up in front of people saying, look, you should think about investing in collectibles, because the whole world's collapsing and you need to do something. And at that time, the collectibles market continued to rise in value, so I personally lost something like 25% of my net worth in the stock market in that year. And my collectibles that I personally own went up by 30%. So that is the recent proof that it is a non-correlating asset. The main thing to understand, right, the gold is the one that people go into as diversification away from the stock market. And as you can see, it's still about market timing for gold. It goes up and down. And that's because gold is still an asset that is driven by the human emotions of greed followed by fear. So greed drives prices up, fear makes them fall down. Collectibles, on the other hand, the prices are driven by passionate collectors that go to an auction looking to buy a scarce asset they may never get another chance to buy again to fill in their collection. And they compete against each other, and the prices rise. And that sets a benchmark for the next time it comes to auction. And that's how over history you can track auction realizations. It's not straight lines, sometimes it goes down as well. But overall, over the long term, it goes up in value. And that is, in a nutshell, the fundamental difference in an investment in collectibles compared to any other investment. And I think, the reason I'm doing this today is I think this is an important time to think about collectibles. And the biggest reason, in my opinion, without a shadow of a doubt, is inflation. It's the biggest erosion of wealth that can happen. And we have a precedent between 1975 to 1980. That was the last time we had high inflation in the UK. GB rare stamps went up by 600% in that 5-year period. They've never done any better than that any other time. It's the best time for rare stamps. They did follow by completely flat after that for 5 years, which is to be expected after such a long run. Hi there, thanks for coming. Just take a seat. Another reason is geopolitical risk, the wars around the world and everything. People are looking at tangible assets now as a protection tool, as something safe outside of the traditional investment mechanisms. And that lends itself to the third point, which is portability, which is particularly for stamps and coins. There have been historic stories where people have left a war-torn country by force, they had to leave, and in a book they've had some rare stamps that were worth £1 million. And then they went to another country and could start an entire new life when they lost everything else. They still had these stamps. It's a pretty negative point, but it does serve to show the real value in portable, tangible assets. It's like an international currency. There's auction houses in every major city around the world, and you can trade it in any currency in any auction.
I've heard that with jewellery. I've heard people having to
exactly the same,
and have sewn the jewellery, well, you know, inside
absolutely
diamonds, you know.
Yeah, it's exactly the same. Portable is the key. Yeah. And is it? Strangely enough, I do this personally. I think that what if scenario, the worst case scenario, what could you take? And yeah, my stamps will be going in the book and I'll be running away. Going into a more positive world, the collectibles market is going through a renaissance, and it started during COVID and the lockdowns, and that's because our industry was forced to move entirely online during that period. And that attracted this new, younger demographic of buyers that are now coming in strong. And I know from going to these investment shows, other investment shows I've been to, not necessarily this one, it's all friends of David Schroeder, but normal investment shows where anyone goes, the amount of young guys that are coming up to me in their 20s that are multi-millionaires, you know, whether it's through crypto or they did pranks on YouTube, who knows, but they've got a lot of money. And they're coming into the market in a big way now and really changing the face of it. And that is the next extension, which is the NFT world, this digital asset thing. Now, I'm not a fan, I have to say, of sort of buying something that has no value whatsoever. But I do see the benefit, and we're going to do it, of bringing together fractional. I like fractional ownership. Fractional ownership is you could own one of the most famous collectibles in the world. You couldn't afford the whole thing, but you could own a bit of it. And you can then say, look, I own a piece of this. And generally, the most prestigious collectibles are the ones that rise in value the most. But we'll combine that with an NFT, where you also own an NFT. So you'll have all that wacky digital crypto potential 10 times your money at the same time as the downside protection, and that you own a fraction of a tangible asset. So we're going to test this to see whether there's an appetite in the crypto world for it and find out what happens. Who knows? But it looks like it is changing the face of collectibles from what I'm looking at the moment. Now, these are the more mainstream 10 reasons our clients give us on a survey. We've done the surveys where we say, well, why do you invest? And these are the main ones. Historic returns, 10% per annum, I like that. It's a good return over the long term. Diversification, the uber wealthy put over 35% of their net worth into other assets, which include jewellery, art and collectibles. And it is something that people lower down the ladder well should actually think about, in my opinion. The low correlation is all about the fact that the prices are driven by, it's a passionate purchase, not an investment-driven purchase, which drives the prices of that. So they tend not to go up and down dramatically. They tend to be quite reliable over the long term. Now, the benefit of a limited supply, what a rare collectible is something that can only become rarer. So a stamp, for example, where there are 10 in the world, there will be less than 10 in the world 50 years from now, because some will get damaged, some will get lost, some will just get destroyed. You might even get some donated to a museum, but there will be less. So inherently, the supply will come down, and that's a great part of an economic formula to guarantee success. You then have this rise in global demand, which there's a Goldman Sachs survey says that by 2030 they expect 2 billion more middle-class people in the world, and that's demographic of a collector, and that is creating rising demand above most other things. The biggest dynamic we're witnessing is the Asian market is really coming in strong now, where bizarrely we're selling things that are British to the Chinese. So they're buying British coins and British stamps as a sort of tangible asset. I think that the Chinese in particular really get the benefit of a tangible asset more than most other places. There's a pride of ownership, and that's probably that I personally like the most, is that there's a great pride in owning a piece of history and touching a piece of history. So I've touched things like, that Admiral Nelson's touched, Napoleon's touched, Winston Churchill's touched, and you think, these were in the hands of these great people, or not necessarily all of them great, but well, many of them were. But it's just that touching history, I find, is a great thing. It's a great thing to talk about. The tax benefits are really, it's a capital gain, and some of them are exempt from capital gain depending on what you're investing, but capital gain gives you a lot more tax planning advantages than an income-based investment. Highly portable, I mentioned, it's like an international currency. Liquidity is probably the one thing that most of our clients have said this is a benefit, which is a bit wacky, because we didn't get that one, because most people tell us that's a downside to collectibles. It's not like buying and selling shares in BP. You don't press a button. But funnily enough, that's a benefit, because the fact that you can't press a button and sell in a panic means that you can't crash our market the way you can crash any other market, because it does take time to buy and sell. And it is a £100 billion a year market. The collectibles market is £100 billion. eBay is enormous part of that market. They're about 6% of the market. And the internet has provided a sort of global market for the first time, and much better price transparency, where if I was offering you something, you can go online and compare prices and make sure.
It's quite extraordinary that, in my lifetime, yeah.
Yeah, which before you would either trust me or not, and you would have to live with that, whereas now I could still check online, and this is the price it sold for last time, and that's the price I'm selling it for you. And I like that, actually, because I've never been the one that rips off the old lady and all that. There's people that make a living out of that, but it's never been our business model. And it's great to see that business model coming unstuck, I would say. Family heirloom is quite a common one, actually. I see a lot of people buy things for their grandchildren, and it's something that they want them to inherit one day when they're older. Or a lot of people say, like, I want you to inherit this as part of the estate. It's something that's different. And I probably personally, that's my main motivation in my personal collection, is my children will inherit all these things that, even if everything else went wrong, that will still be there. So there's a sort of little safety net that's separate from everything else. And the way the market's going is recognised by, the theme has been like record realisations across all asset categories. This British Guiana 1 magenta is a ludicrous one. $9.5 million is sold in 2014 to a guy called Stuart Weitzman, who's a billionaire shoe designer. It's since changed hand, and Stanley Gibbons owns it now, but that was the record price ever for a stamp, which is, I've seen it, I've actually handled it, believe it or not. Many people have done that, but it's ugly. And it has no...
It says the Mona Lisa.
But that's the wacky world of collectibles. The US silver copper dollar, that's the US's first dollar. And the funny thing about coins in the US, that went for $10 million, but UK coins, the English coins, go back much further in history, but they're worth a fraction of US coins. And I've always thought, and I believe in English coins as an investment. I just think they're great things you can own, and they're so much cheaper. It does attract quite a big investment market, coins, because it's not that challenging for a gold bug to move it over into gold coins. It's quite a simple transition to make. The Breguet is a watch called the Marie Antoinette of watches, $30 million. Historical documents, which has been a big area in recent years that's come up. This is George Washington's signature on his personal copy of the Bill of Rights, and that was $9.8 million. $9.8 million. Art, different world. The Leonardo da Vinci Salvador Mundi, $450 million. It's just, yeah. You have to be a multi-billionaire to be in that market. But it is interesting to see that. I mean, I know why it is, because there's been a huge polarisation of wealth, where the wealthy are getting obscenely wealthy beyond comprehension. Multi-billionaires are more common now.
How much would the Mona Lisa be worth then now?
How much, sorry?
How much would the Mona Lisa be worth if it
or you can't buy it. So
If you could,
if it came on the market, billions, I don't know, you could never guess. I mean, a lot of these things, like this one, this stamp, when it came up, I was a bidder at auction, and my maximum bid, and I thought I was going for it, was $2 million. Well, I was nowhere near. And even then I was frightened. I was like, I hope I can sell it for 3 because I'm not sure I can sell it at all. Yeah, things like that are priceless. There's a lot of things in museums that, it's like the spacesuit that Neil Armstrong wore in the Smithsonian. I mean, that's worth multi-millions, but you could never know. It really comes down to people where money is no object will compete against each other, and the price will be completely insane. That's the world of the top end of the market. So I'm going on to the negative bit, which is that, like any investment, there are risks. And the 6 that I put up on this slide are the 6 things that I most commonly see people getting wrong when they're doing it, and they come and talk to me about what they've done. The first and most common one is that the vast majority of people focus on the price too much. And the fact of the matter is, it's the people with the deepest pockets that pay the big prices are very discerning about quality. They wouldn't pay big prices for poor quality examples. It has to be the best quality example in the world is what you're looking for the best investment. And if you have to pay more for that, it's worth it, because that's what will go up in value. Second, it's probably fueled a lot by the amount of TV shows promoting auctions, but loads and loads of people now want to go to auctions. It's a great fun experience. A lot of people think it's a fair market price. It is in some ways, it's transparent, but there's a lot of funny things going on at an auction that unless you're on the inside, you won't know about. And also, if you won, you paid the highest market price on that day by definition, so you didn't get it cheap. But the bigger problem is things are quite often not described correctly. And usually we'll see people that have bought something where it's described as mint, and we'll look at it and say, well, it's not. It's worth 50% of what you paid for, unfortunately. And therefore, I would always recommend, if you want to buy an auction, which is a good place to go and buy, get someone like us to look after you and say, I'm thinking of bidding on that. Could you advise me? We go to the auction and we view it in detail and confirm if it is exactly as it's reported to be. Another one is understanding the difference between rarity and scarcity. The example I always use for this is that my grandfather has got an incredibly rare signature. There's only one known, but he wasn't famous, so there's no one in the world who wants to buy it. What you need is rarity, and there's a desire to own it. So it has to be, there's more people that want to own it than there are examples in the world, and that creates the economic model that ensures that it will go up in value. Another one is buying into one area of the market. You do see sort of specific areas of the market can have a bad time, and if you put all your eggs in that basket, you might find that it wasn't a good investment. A good example would be, there was a high-profile collapse of Stanley Gibbons in recent years. GB stamps fell by about 25 to 30%. They're now coming back up in value, but if you'd been in the market at that time in only GB stamps, you'd have lost money. So we always recommend someone looking at investment, diversifying into lots of different areas, because some will do well, some will be flat, and the odd one might go down. But overall, you should average the 10% per annum, or thereabouts. Another common one, which is why we offer secure storage to investors. So we provide secure storage in G4S vaults and third-party specialist insurance cover as well, which covers specific things relating to what can go wrong with collectibles. I've seen people bring in stamps that have been kept in a damp place, and something called foxing happens where they get all these brown spots all over them. And I looked at something that the guy spent £50,000 on and told them it's worth around 5,000 now. He's lost 90% because he didn't store them correctly. So huge risk, and you really need to think about these things. So this is our services. As far as I'm aware, we're the only company that actually bothers to offer a service to investors where we say, look, we'll do the whole thing, we'll help you to buy, we'll store them, we'll give you annual valuations like you get in any other investment. We'll give you an investment report which talks about the market and what's went up and what's went down. We'll also contact you because you'll be on our database where if we get someone specifically looking for something that you own, we'll contact you and we're an agent where they say like, I'll pay double what you paid, and you say, yeah, I'm happy with that, and then we're the agent in the middle. And then when you come to sell, we have you sell, and the trading spreads are not as good as like sort of buying FTSE 100 companies. And going on to that, this is what our core skill is buying. And we spend 10 times more effort buying than we do selling. Because if you buy the right things, they sell themselves. It's simply how it works in our market. And these are the rules for everything we buy. It doesn't matter whether you're a collector or investor. Number one is rarity. So I'm using stamps as an example here. This is a block with an error on it from Cyprus. Probably can't see, but there's no perforations here. And it's only a block of 4 with that error, making it unique, which is obviously as rare can be. Condition, this is actually my stamp, because it's my initials, MH, Mike Hall. So that's in my collection. And I spent 15 years finding that, to find one in this quality. That's how difficult it is. It's got all 4 margins. In 1840, the stamps were cut by busy postal workers with scissors or with, just like that. Most penny blacks have 3 or 2 margins. To get 4 even margins is quite challenging. For it to never have been used is quite unusual because there was a postal revolution that were all used. And albeit it was only a penny. A penny was a lot of money in 1840. So that makes it amazing. It's got no damage on it at all. The big one, which seems strange, but what adds the most value to this stamp, condition-wise, is on the back, all of its gum is still in place, which is highly irregular, because most people would have put this on an album with a hinge, and then part of the gum would have come off. So it's a real anomaly in this complete, sort of as if it just came off the printer quality. That makes it one of the best quality examples, and therefore one we buy. Authenticity is so important, and what we do, anything of value, we get an independent certificate, so don't just rely on us. Yeah, we know what we're doing, but we don't care about that. We go take it to the British Philatelic Association or the Royal Philatelic Society, and they give us a certificate saying, yeah, that stamp is authentic. And the reason we do that is that adds value. We already knew it was right, but with that certificate, you could sell it to anyone, because those certificates are recognised all over the world, and everyone won't even bother to look at it. They'll go, yeah, that's right, it's got the certificate. So it adds value as well as being a good choice. Liquidity, I've used this stamp as an example, which is a good anomaly where something that isn't rare is scarce. This is the 1980 Year of the Monkey stamp. It was the very first New Year commemorative stamp from China. And it's famous because it's red and it has the number 8, both of which are lucky symbols in Chinese culture, and it is massively iconic in China. There are about 20 million collectors in China alone. And although 5 million of these were printed, there's more people want to own one than there are in existence. And as a result, it's been a great investment because it just keeps rising in value. Price is what we do best. We know how not to overpay. We know what the value is. We don't get caught up in any sort of bidding war. And we also know how to source things at a good price and to prove that price to people that, look, this is a fair price because. And that's the basis of our business model. So I thought I'd use an example of one that actually is this like the sort of bacon program thing, one that was made earlier. So 10 years ago, there was a US client came to us and he wanted to build a portfolio for investment, and this is what we built for him. And that was the price he paid, $40,000. So 10 years later, his last valuation was, it's not exactly 100, I just did this for effect, it's $100,000, 149% growth, which is quite typical. And what you see when you look down the benefit of diversification, the block of 4 of the Chinese monkey stamp, even rarer, is up 445% in 10 years. But what this is one of it's a very famous British stamp, but the British market was quite poor during that time. It only went up 40%. But it's quite interesting to note that despite a drop-off in that market, overall over 10 years there was still growth in value. And it's all about diversification. This is a personal horoscope that J.K. Rowling did for a lady in her maternity class. And she gave it, it's all her illustrated work, and then there's a handwritten horoscope. So it's one of the most famous authors of all time. It's a great sort of piece. And the lady she gave it to sold it to auction, and we bought it. This has since sold to J.K. Rowling. She bought it back from us. She said, "You're not having that. I don't want that in the market." And so she bought it back. And I think that covers, I don't know how long that was, but I think that covers everything really I wanted to talk about today. It's difficult to give an introduction in what is quite a complex subject. But we've been sort of dealing with collectors and investors for over 20 years. And we've handled over £100 million worth of collectibles during that time. And I think what gets us up in the morning is the thrill of finding these great things and buying them. And I actually find the process of selling them quite painful sometimes, because I love this great collection I have around me that we've managed to purchase, and I always find the things I like the most sell the quickest, and I never get to see them for very long, and it's like, why did I bother? But that's our business model. Any questions on that? Any specific questions?
What about this Collector Labs?
Collector Lab is that is the NFT with fractional ownership. So we're going to get an asset, a collectible, and we're going to create an NFT.
So you'd still own a share of that physical asset.
That's correct.
You're trading in an NFT.
So at the moment, there's two things exist.
So what if the NFT? I don't know.
You own an NFT and a share.
The NFT. Who owns the NFT? You.
You own the NFT. So say it was a £100,000 asset, and you bought one share for £100 or whatever. You own one NFT worth £100. Like, as you know, an NFT can sort of be worth whatever. It's a market driven by supply, demand. It's nothing to do.
I'd still own 1%. That's
yeah, and you'll own.
Regardless, just the mechanism is
you own a piece of the asset.
It's the NFT
contractually and legally.
Yeah. And
we hold that for you on a bit of trust, so we have no right to the asset. We're just.
So you could presumably instead just create, I don't know, a share certificate.
Yeah.
Or some form of proof of ownership.
Yeah, you would get that with it. Yeah. So you would get a
still
share
own
of
the
ownership,
physical- still own a share of
like
physical
you would
asset.
get a share of ownership certificate as
Still
well.
get a share of the ownership of the
As
asset.
well as
It's just
an
the way-
NFT.
It just makes it easy to trade it, I presume.
You couldn't trade your fractional ownership because it's tied to the NFT.
You can sell your NFT.
You sell your NFT anytime you like, yeah. And when you sell your NFT, you sell your fractional share at the same time.
Yeah.
What would happen though if the NFT market, say like we listed them and it didn't work because the crypto world continued to be crazy and collapse, we could then get an offer for the asset and then you could get out without losing money because you still own that asset. Whereas, I mean, what might happen though is the NFT is worth far more than the asset. It will become completely disengaged from the value of the asset.